Hey guys, welcome back. So a couple of really quick terminology things today. I've heard these banded around frequently recently, and I thought, oh, I haven't heard these ones for a while. Normally because they only come in certain market conditions. So what is a dead cat bounce? We'll talk about trading. And what is catching a falling knife in trading? We don't hear this so much anymore because we're in a bull market. So what does that mean? It generally tends to mean that these are the kind of things that happen when prices are going to the downside. So let's talk about a dead cat bounce. If we've got a stock, a market, a commodity, anything with a chart that's going to the downside, okay, it's going to push down here. And often we get that this is often tend to be referred to when we're talking about a stock. So a stock is in trouble. It's a dead stock. It's kind of they're struggling. They're not making any money. They're losing money. It looks like the company is going under. This is kind of where this comes from, although we do extrapolate that into currencies and so on. So based on the chart pattern, we'll explain in a second. But ultimately it means that, listen, this thing is dead. The company is going under. There's no hope for it. So the stock price is going lower. This could be based on profit warnings, whatever it may be. And then we get a little bit of a bounce up. And this is kind of this is caused by the people who have been short from way higher, and now it becomes not even worth holding it until zero because it's down to maybe $1. They've been shorting it from $50 to $1. You make an extra $1, it doesn't make any difference. They may as well come out of it. You've also got people that it gets to a certain level that think, you know what, the company might turn around. It's worth a punt for me. It's a 10-to-1 risk reward, 50-to-1 risk reward. I'll have a go at it. So this is what's called a dead cat bounce. In other words, the stock is dead, like a dead cat, and a dead cat will bounce, but it's still dead. And that's the theory behind it. In other words, if it falls off a tall building, a dead cat might bounce, but it's still going to go, and it's called still dead stock, or still a dead cat. So this is kind of what you call a dead cat bounce. And if you look at a lot of charts, this is very, very common occurrence with a so-called dead company or useless or something that's really, really fundamentally in trouble. You get this situation where you get a little pop off the low, sucks a few bars in, a few people are excited, a few people are short covering, and ultimately it just becomes pointless, and it goes back down to zero. So it's like that final little gasp before it completely dies. And that is generally always in a downtrend. It's always when something is really, really fundamentally struggling. Let's not mix this up concept with just literally falling down and bouncing and continuing just in a downtrend on daily or anything. That's not a dead cat as such. The dead cat is something that's completely hammered, completely looks like in trouble, but has this last little gasp before it finally falls through the floor. Okay, so while I'm at it, I may as well stick with these terminologies. I've heard this one as well, is catching a falling knife. What does that mean, guys? It basically pretty much as it sounds. If you've got an aggressive downtrend, catching a falling knife is someone who comes along. If you're catching a falling knife, it comes along and you're buying literally into that aggressive downtrend. In other words, there's a knife falling from the 14th floor and you're there and you've got to catch it. Now, that's a dangerous thing, right? That's the point. If you're lucky enough, you'll catch it by the handle. Bob, off you go, you've made some money. The chances are you're going to get cut because the blade is that big, the handle is that big. You know, a knife comes down, you grab it, you're going to get hurt. In other words, if you try and catch a falling knife by going along here, the most likely scenario is it's going to hurt you and keep going lower. So that's the terminology. And really, people say catching a falling knife, they don't mean necessarily trying to find the end of a trend. They say that you're literally buying right away straight into an aggressive downtrend, which of course, if you time it right, can work out for you. And catching a falling knife, if you become skilled at it, potentially. But what people are basically saying is, listen, wait for some kind of reversal pattern before you get involved, because the knife has slowed down then. Even though it's at a downtrend, you're seeing some kind of response or some kind of justification that could be a low, as opposed to literally just buying straight into an aggressive downtrend, trying to catch that falling knife. So a couple of funny little terminologies for you. Dead cat bounce, the little bounce off the low, and ultimately it's just nothing that's going to fall to the floor. Catching a falling knife, aggressive downtrend, you're there trying to be clever and trying to get the right point where it's just going to be exactly right. Chances are you're going to get cut, and that's where it comes from, catching a falling knife. Funny things, there's lots of those ones like that in the market and traders, and maybe in future videos we'll talk about some of the slang and some of the terminology that traders have for things. So that's it, guys. All I've got for you. Don't forget to subscribe, like, share, comment, all that kind of stuff. See you in the next one. Take care. Bye-bye.